All right, what's up, everyone? We're going to go over the NYSE high-low index today and how I like to use this chart layout. Now, this chart layout comes in the market breadth package, and it's one of the instruments that I really like to look at for market breadth and give some really good signals as we'll go over here in just a minute. Now, this chart layout is designed to capture market breadth with the S&P 500 index displayed below. The top panel shows the NYSE high-low index, which measures the difference between the number of stocks making new highs and new lows. The yellow horizontal line represents 0, indicating an equal number of highs and lows. Now, there's periods of divergence marked by red and green arrows, which highlight potential buy and sell signals. When the high-low index diverges from the SPX, it can indicate a shift in market sentiment, providing traders with valuable insights for making more informed trading decisions. Now, if that was a little too complicated for you to understand, let me try to break it down even simpler. Okay, so what we're going to do is we're going to take a look at what the high-low index is doing on the top here. Right, we're not going to specifically measure the exact levels that we're, trading at or different things like that, but more what is the trend here? And so if we take a look, we've got the high-low index on the top, and then we've got the S&P 500 index on the bottom. We see we're in a clear uptrend here, making higher lows, higher highs. Well, what do we have on the high-low index here? We've actually got nothing but lower lows on this chart. So as we're making higher lows here, we're making lower lows. And we see that this period of divergence here ended up marking, basically the shift in trend, right? And underneath, when you look at the breadth was not necessarily agreeing with this large uptrend that we had. And, after about the second or third week of that, second or third week of seeing the stock market catch up to this, we see that we actually went through a significant downtrend afterwards, and this was during that bear market of October 2022. So heading into 2022, there were a lot of signals. If you peel underneath the hood of the market, right? Let's say the stock market is an engine, right, or a nice vehicle, and you want to make sure that everything is running smoothly with your vehicle. Well, you need to look underneath the hood sometimes, and that's what market breadth is for. It's a great way to do that, and it gives you these different signals that you guys can potentially, capitalize off of. Now, it works to the upside as well. If you take a look here, we're making lower lows, right? So we're in a downtrend here, but the high-low index is making a low and a higher low. So I like to highlight all of these divergent periods, and oftentimes they can be really good buy or sell signals. Now, no strategy, no form of market breadth, whatever you're using is going to be 100% accurate 100% of the time. But if you take a look, this does have a pretty good record, okay? So we see here it led to a sell signal. And here we're seeing it lead to a buy signal here, right? Saying that, hey, well, market breadth is actually improving as the market is going lower. This could be a potential bottom. And we go on a very significant rally here over the next couple months. And what do we see? Well, we get another divergent period here. We're making a low, higher low, low, lower lows, right? And what do we get? Well, again, we get another nice little rally here for a couple months. And over here, this is a great example of it's not always going to work perfectly, right? Here we're making higher lows. Here we're making lower lows. And we actually do sell off here, right? We have about 1 or 2 weeks of red, but it's not long-lived, right? It's very short-lived, right? We have a extremely painful 2 weeks, and then we just bounce right out of that and continue to rally. And ever since then, we're recording this in about the middle of 2024. Ever since then, the stock market and the high-low index have pretty much been moving accordingly, right? The high lows are above zero, and we're seeing an uptrend in the stock market here, and we're seeing an uptrend in this. Most recently, we're starting to form a new divergence. The S&P 500 just made new all-time highs, and meanwhile, the high-low index is making lower highs. We have a high and we have a lower high. So we're going to see how this develops. Oftentimes, these can develop for long periods of time, as we saw over here and over here, as we saw over here and over here. But they can also give, short-term signals here as well. So knowing that over here and over here, there were good short-term buy signals, we want to keep in mind that, hey, we could see some type of a short-term, this could be a short-term sell signal, or if this divergence extends and continues to happen longer, it could turn into a longer-term sell signal, right? And so this is essentially one of the ways that I really like to use the high-low index is by spotting these divergences. You can also use it to just measure, again, the number of highs versus lows. If you're in an uptrend, you want to see stocks making more new highs than more new lows. It's just that simple, right? So you should see a positive difference in those two, and you should see that increasing. And as we saw over here, where you're not getting that, and you're actually still in an uptrend, that's letting you know that market breadth is actually deteriorating underneath the hood and underneath the surface of the stock market and the overall index. So thanks for watching. All right, if you enjoyed this market breadth chart layout, remember this is one of the charts in the market breadth layout package that you guys can purchase, as well as many other different packages that I have available to you guys. I've got some specific chart layouts for trading certain instruments. I've got some specific layouts for measuring market internals, and just overall many other things such as seasonality, yield curves, intermarket relationships, and things like that.